Welcome everybody. My name's Debbie Vowles. I'm the area manager for Andrews Letting and Management, covering Bristol, Bath and the Stroud locations. Welcome to our buy to let property session. Just a little bit about Andrews. For those people who don't know much about Andrews, we've been established since 1946 and we've got 85 estate agency branches in the southwest, southeast of England. We don't just do sales and lettings, we cover lots of things to do with property related really. So mortgage services, we have a surveying business, we do conveyancing, we also do block management as well, so all around, so if people have got flats and they want somebody to block manage. We also have a land and new homes department as well, and we also manage properties all around the UK on behalf of some corporate landlords and some portfolio landlords. So we can do block management of portfolios of properties all around the UK. Andrews Letting and Management, we've actually helped more than 7,000 landlords let their property just last year. And we're registering on average around about 1,000 tenants with us each week. And we're a multi-winning, award-winning company. We've won lots of, you will see there, Sunday Times Awards. And we're also members of ALA, which is the Association of Residential Letting Agents, and the Property Ombudsman as well. So why invest in property? Well, the rents in the UK are forecast to rise by 2% in 2015. And also it is a fast growing sector in the sense that obviously as home ownership becomes more expensive or out of reach of most people, then a lot of people are going into rented accommodation. Also, not everybody wants to purchase a property. A lot of people do actually want to rent for mobility reasons or economic reasons as well. The average UK rent for tenancies in December last year was £867 per calendar month, and that was 6.6% higher than the previous year as well. And the average void period has dropped because of the tenant demand, and that fell to 2.6 weeks. And we'll talk about some of the things that you can do to keep your voids down as well. The average rental, actually, you won't be able to see, we have given you the slides, but the average rental in the southwest is £858 per calendar month, and that's a 5.4% increase, an annual increase. Now coming on to the sort of the 10 steps really to becoming a successful property investor. So if you're looking to invest, what you can actually do. The first thing is to define your objectives and to think about what are you in it for? What are you looking to invest? What are you looking to invest in? Where you're looking to invest? The main thing to be thinking about if you're looking to invest, you shouldn't treat investing in property any different to if you were investing in stocks and shares or pensions, for example. You should consider everything very, very carefully. And are you looking to actually sort of looking for just rental income growth, or are you actually looking for capital growth as well? And those are things that will make you decide perhaps where you're looking to purchase a particular property. So, or do you want both? So those are all things to take into account, and these are things that you need to be thinking about before you make that investment, and not just if a property becomes available to you and maybe it just falls into your lap. You need to be thinking about these things to make sure actually is that property the right property, or would I be better placed putting my money elsewhere? And also thinking about how long you're looking to do this. Are you looking for just one property, or are you looking to expand your portfolio? So where do you want to be? And treating this as a medium to long-term investment. This is not a quick get-rich scheme in terms of property investment. It should never be treated as such. And the main thing is doing your sums carefully. Hopefully we'll be able to show you how to do that and the things to think about. Next thing you need to think about is consider your risks. Think about the costs that, whether the costs actually exceed the income that you're going to be getting. And you need to think about all the costs that you're going to see through, not just when you're purchasing the property, but the lifetime of you owning that property as well. And also, can you afford it whilst there's void periods as well, or maintenance issues? They're all things to be thinking about. Thinking about that, if you have a mortgage on the property and you financed it that way, can you afford for the mortgage, if it goes up, can you actually afford for those to meet those mortgage payments? And that might be thinking about your choice of which properties you actually decide to go with. The main thing to also think about is also what can you do if a tenant doesn't pay their rent. Now, you will be pleased to know that there is only a small percentage of tenants that actually don't pay their rent, and actually Andrews only have 2% of its portfolio at any one time in any rental arrears, and most of those are less than 2 months. But what you need to be thinking about is actually, if they don't pay the rent, you've still got to pay your mortgage. So how are you going to finance that? You can insure it with, there are some rental guarantee schemes around, that's possible. But if not, have you got contingencies in place to pay your mortgage? Because obviously the risks are huge if you haven't. Obviously, if you're also then looking to offload your property at any particular time in the future, you have to remember that what's that 10 years, 15 years down the line, or 4 years down the line, maybe seem quite a way off, but you've got to be thinking about when's the right time to offload a portfolio, and thinking about the prices. Property prices can go down as well as going up, and as we've seen over the years, there's been a real roller coaster of that happening. So those are all things to be thinking about. And in terms of cutting down on your void periods, the one thing to be thinking about is finding the right tenants to start off with, and actually making sure that you're buying a property in the right areas, that you're going to have the demand for it. Again, it's not just thinking about a property's dropped in your lap. You may, for example, have had a property that's been left to you as an inheritance, for example. Is that the right property to actually be letting out? Does it meet all the criteria that people are going to be looking to rent? Or would you be better off selling that property, and if you still want to invest, using the money to invest in an area that's very popular? The other thing to think about in terms of the risks, the buy-to-let mortgages are unregulated from the point of view of, or not as regulated as residential mortgages, for example. However, there are steps in the future looking for government to regulate that a little bit more and look at it more closely and look at it more from a commercial aspect rather than just a residential thing. So they're all things that you need to be thinking about. There's also, us being part of the EU, we're also subject to things that they bring out as well as our own government. And there is the new Mortgage Credit Directive, and that means there's the mortgage market review is one of the things that come into place. There's also other things that may affect that. And an independent mortgage advisor, Michael, here tonight would be able to sort of tell you a little bit more about that. The other thing you need to be thinking about as well are your legal responsibilities, because those are the things that, and keeping abreast of all your legal responsibilities. One of the things that you may or may not be aware of, that, and this would help you in terms of choosing a new property, one of the things that's coming into play, that if you've got a property that the EPC rating, the Energy Performance Certificate rating, is an F+ property, so F or G, those are properties as of 2018 you won't be able to let. So if you've got a property that you've already is an F, is there ways that means that you could make that as a lower rating? And actually very often if you've got an EPC rating done on the property, perhaps when you bought it or when you've been letting it out, that is something that you could look at to see whether that they'll make recommendations of things that you can often do. Sometimes it's even as simple as changing things like light bulbs and such. But if there's more major works to be done, you may be deciding, is that money that I want to spend on that particular property or not? And obviously if you're considering purchasing a property, that's something that's really important to take into consideration. When you're purchasing a property, there will always be an EPC rating on the property, so you will know from that right from the off, and that's the one thing to definitely bear in mind. Second thing is about planning your finances. So thinking about actually how are you going to finance this property, and how is it going to be affordable for you? The main thing, if you've got cash and you've got a lump sum and you're lucky enough to be able to put that all down on one property, that's great. So your risk is a little bit more minimal than if you were to take a mortgage out. But obviously most people do tend to take mortgages out on a property, so therefore there is a risk, and you need to make sure that you've got the funds in place and the the property is the right type of property, as I've said already, that will always be rented out, and you're going to get your tenants in that are going to be paying rental. But you need to make sure that you've got the ability to pay that mortgage. The one thing to do is obviously then look at what buy-to-let mortgages are available if you decide to go down that route. And the main thing is speaking to an independent mortgage advisor who can give you the best rates. Our guys can actually look at whole of market, and we can get rates that quite often that are not available should you walk into the same bank or building society and try and get yourself. They do change all the time, so it's well worth always speaking to people, and don't just look at the initial sort of headline fee and things as well. You might want to think about gearing, and gearing is whereas if you've got, for example, £100,000 in cash, rather than put all that into one property, for example, is you actually split it up, and you may think, sort of 25,000 on 4 properties. So you're actually spreading your money, and you're actually building a bigger portfolio. The one thing to think about with gearing is obviously it's a bigger risk because you're taking on bigger debt, so the risks are greater and therefore they're magnified. The upside of that is also the fact that you're not putting, if a tenant's not paying on one property, you've got no income coming in. But if you've got a tenant not paying on one property when you've got 4, then your risk on that is slightly, you've still got rental income coming on your others. So you're not sort of exposing your whole £100,000, for example. So, and again, I'm not qualified to talk about the gearing in detail, but our mortgage advisors can do. The main thing also is to budget for every single cost. So if you're purchasing a property, you need to be thinking about, first of all, the deposit you're going to be putting down. It can be 20% for a buy-to-let mortgage deal. There are deals around for that, but you're going to get better deals the more deposit you put down, and probably if you put down 25% of the purchase price, you're more likely to get a better deal available. The thing to think about is also the mortgage fees that are available, that are attached to that deal, because most mortgages now are not necessarily free, and it's always not just looking at the headline percentage, is actually looking at all the other costs as well and factoring that into your total cost of that mortgage over the term, because obviously you could have a £2,000 arrangement fee, for example, and that could wipe out any sort of slightly lower percentage over a period of time. So they're all the things that you do need to think about. But again, a mortgage advisor should be able to go through all of those things for you. Thing to factor in, obviously, if you're buying, survey fees, solicitors' fees, and also stamp duty. Stamp duty has changed, and you don't pay on anything up to 125,000, but there aren't many properties, certainly in the southwest, around that price range. But anything between 125 to 250 is 2%, and 5% of the purchase price above 250. So again, that is something that's going to eat into your overall yields as well. Then thinking about sort of the sort of costs that you're going to incur as a landlord day to day. You've got things like the building insurance and contents insurance on the property. You need to make sure you have specialised landlord insurance. And also the repairs and running costs that you're going to incur during the lifetime of that property. And you do have to think about the fact that you need to be keeping that property up together. You need to make repairs and maintenance. And if you think about the own property that you may live in, there's always things that do go wrong. Your boiler might break down. It might need replacement. You might need a new kitchen in sort of in the future, or windows, etc. So you need to be thinking about all of those things. Always keep receipts, because the main thing is you can, in terms of expenditure that you have over the period of time, if you do decide to offload your property at some period of time in the future, you are going to be subject to capital gains tax, but all the expenditure that you would have occurred during the time, then those are things that can help reduce your exposure and liability for capital gains. So that's something to think about. Also to be thinking about if the property is empty, because obviously if you have a property empty for a long period of time, insurance is limited as well, and obviously you've got no rental coming in to pay your mortgage. So again, it's making sure that it is the right property and factor that in. Most landlords do tend to factor in at least 1 month a year. That sounds quite a lot, but actually, hopefully if you're doing longer term tenancy agreements, you're keeping that void period down, but try and factor in things to think about. Obviously think about your mortgage payments as well. And also, if you're going to be using a letting agent, their fees, so that sort of thing. Or even if you're doing it yourself, what fees you may incur yourself and costs you may incur in terms of your time. Sometimes it can work out cheaper to use an agent. They're all tax deductible in terms of agent fees as well, you'd be pleased to know. So, and also think about, one of the things, if you do come to, and this is very long term and hopefully, well, you won't be around to sort of thing, but thinking about inheritance tax come the end as well. One of the things you need to be thinking about, that obviously this will form part of your overall estate. So that's something you need to be thinking about. And the threshold for inheritance tax is 325,000 for a single person and 650 for a couple. So it does combine all of your assets, and quite quickly, especially in the southwest, you could get up to that very quickly. But there's ways and means that you can reduce your liability in terms of how you deal with that. And it's always best to speak to somebody who's an expert at that as well, like a tax expert, and they can tell you what you can do. The main thing then, if you're looking to purchase a property, is make sure you do your research. Is where is best? Where's the best property that you can buy? Again, it's first and foremost is what you're looking to get out of it in terms of all of your investment. Are you looking for the income, the capital growth, or both? And you need to be thinking about those things. So think about the rental yields. We have put some investment properties in for you there, and some of those will show the investment yields that you could get on those. Those are the gross yields. Also then think about the tenancy demand. Are these properties that are in demand most of the time? Because the more that the property is in demand and it's a popular type of property, the less chance you have of having your void periods. So and that's the ways and means that you can keep that down. Also thinking about, like I say already, what's the best buy-to-let deal that's available. And also you might want to be taking into account where's the best capital growth areas for you. Generally, some of those do tend to be in the big cities where economically they've got a lot of investment in, and also generally in terms of tenant demand as well, and where you get good capital growth are also university cities as well. So where you've got good universities, then that does actually draw in, and that keeps a very vibrant economy going. So they're all things to think about. We can give you, in terms of, obviously it all depends on your budget as well, but what we can do is, if you're looking to sort of particular areas and you've got a budget, we can tell you about the particular areas in our catchment areas that we can tell you about as well, and other places outside of that. Finding the right property. What type of property do you actually decide to purchase? Do you look at a new build or second-hand property? Again, this is something to factor in, because if it's new build, your chances of, in terms of your expenditure in the first few years, would be slightly more limited perhaps than, say, buying a second-hand property that may need some work doing to it. So that's something to consider. And also think about, actually, if you're finding the right property, you've got to also establish, is that a property that if you're looking to get a mortgage on, that the mortgage lenders will actually invest in? They do change their criteria quite often, and there are some properties that they don't like to invest in. Sometimes, for example, flats above shops, etc. Sometimes that does limit it, not to say you'll never be able to get a mortgage, but it does limit some of your lenders, for example. So, you know, there are very few properties that are completely unlettable unless unmortgageable, but you do need to be thinking about that if you're mortgaging a property. And also thinking about, because if you're if it is a property that's difficult to get a mortgage on, if you're looking to sell it on later on, somebody else may have the same problem as well. Also think about whether it's a flat or a house you're looking for. So if you're looking for flats, there's an additional cost that you need to take into consideration, and that's the cost that you'd incur as the owner of the property for paying service charges on the blocks, because that is not the responsibility of the tenant, and some of those can be quite hefty. So they're all things and the estate agent selling the property should be able to tell you those sort of figures. So they're things to think about. But flats are popular from the point of view of actually tenant demand, because a lot of people don't want the upkeep sometimes of gardens and things like that. And again, actually, that's a consideration you may want to think about, because do you want to have a property where you run the risk sometimes that a tenant may not keep the garden up together, and that might be then a cost that you start to have to incur to keep it in a reasonable condition. Then think about the type of tenant you're looking to attract. the vast majority of people looking for rented accommodation are between the early 20s to mid 30s. And that's getting slightly older as people are, the average age of a first-time buyer I think is about 38 now, so it's sort of going up. But it is your single young professionals, couples, people sharing. If they're looking for a property, they're looking for places that are generally near to very good transport links, and also looking for something that quite often are near good sociable areas, like, so for example, the Gloucester Road, Southfield, areas that are very popular for people. If you're looking, don't exclude families. There's a lot of families looking to rent. But the thing to think about of a family is, if you're thinking, oh, that's a good property in a good area and it's a good price, what you need to be thinking about is how decent are the schools nearby, because a family are going to be looking at the school availability and what their sort of ratings come out as a school, and those are all things that they'll take into account as well. And like I say, think about the properties that are most in demand, and a good letting agent will be able to tell you at any one time what the vast majority of people are looking for. Also, if you are looking to purchase a property and you venture into and put your toe in the water of the larger houses, student houses for example, or those affecting sort of the sharer market, you are subject to what they call houses in multiple occupation. And there's licensing that's surrounding that, and other things that you have to do as a landlord to make sure your property conforms for things like that. So that's something to bear in mind, and we can always give you advice on that as well. The main thing is once all of this, if it all stacks up, then then go out sort of looking for properties and start building your buy-to-let sort of portfolio. Next thing to do is think about calculating the yield. Just the easiest thing to calculate a gross yield. If you had purchased a property for 200,000 and your rental income was 950, we use the following formula that if you times that by 12, you're going to get your annual income of 11,400 per year. If you divide that by the purchase price and then times by 100, that's going to give you a 5.7% gross rental yield. That is your gross rental yield. Obviously, then what you need to be taking into account are all the costs that I've already spoken about earlier that will then potentially bring that down. So it's factoring your property maintenance costs, insurance, mortgage payments, etc. as well. But the main thing is actually if it all stacks up and that property is what you're looking for in terms of yield or the capital growth, it meets your criteria that you've already set for yourself, then it's finding the right mortgage. And it is making sure that thinking about what type of mortgage do you want? Do you want a repayment mortgage or an interest-only mortgage? So obviously with what you have to be thinking about, if you have a mortgage, it is tax deductible, but only the interest payments. So if you have a repayment mortgage, basically you can't offset what you're paying off against the capital, but you can offset the interest against your tax. Then thinking about a fixed or variable rate mortgage, what you're going to be thinking about is, do you want the security of knowing you've got a fixed term and you know that that's coming in, that's giving the surety, but obviously then you're going to be paying slightly above the sort of variable rates as well, but then it gives you a little bit more security over that period of time. Or are you looking for a variable rate mortgage? At the moment, obviously variable rate mortgages are quite good, but the one thing you need to factor in, at some point in the future, mortgage rates are going to rise. And that's pretty inevitable really. And you've got to make sure that you're not exposed and that you can afford that. One of the things that mortgage lenders will always take into account, what they're looking for you to do, if they're looking to lend a mortgage on the property, they're looking for the mortgage payments to exceed the rental income to exceed the mortgage payments by 125%. So that's something to bear in mind. So they know that you've got that cushion there. Obviously, it's looking around, like I've already said, about for the best rates and with the fees as well, making sure you take all of that into consideration and get the best buy-to-let mortgage deal. Michael can talk to you about, we've got lots of mortgage advisors, like I say, dotted around all of our network, and they're very happy to talk to anybody. It's no obligation, but if and they can give you the best advice possible. Don't, sort of do your research and do it carefully. Then once you've got your property and you've purchased it, in terms of managing it, do you do it yourself or do you let him manage it yourself, or do you use an agent? And those are things that you may want to think about. If you're experienced into the marketplace, you may decide that you want to do it yourself. However, if you're a little bit unsure, or you want to make sure that you just want that peace of mind and know that the professionals are going to do it for you, the benefits of using an agent are that they know and understand the legislation. And I can tell you there's an awful lot of legislation. There's more legislation in lettings than there is through purchasing a property. And it is there, and there's more on the horizon. And the main thing you need to be knowing is that you're actually keeping abreast of those types of things. And a good agent will inform you every time there's a change of regulation and make sure that they take steps to make sure that you're always one step ahead and doing that. As an agent, we can source tenants for you, so we can do all the legwork. You know, the amount of people that quite often, if you put an advert in the paper yourself, the amount of people that say they turn up and then don't turn up, but we can do all of that for you. So if you don't have the time and that, then it's quite actually of the purchase price, it's actually quite a small amount in terms of fees that, and again, they are tax deductible. We can also do things like collecting the rent for you. So one thing you may want to think about, you're quite happy to let the property, but do you actually want somebody, are you happy to be collecting the rentals if they don't come in? If somebody doesn't pay you, are you happy to make those phone calls? And those are things to take into consideration. As an agent, we've heard all the stories. So what we are very good at is trying to establish the can't pays and the won't pays. And as an independent person, we see it very objectively, and obviously we're acting on your behalf as the landlord to make sure we get a resolution very quickly. We can do the viewings, advertise your property. We can give it maximum exposure because we use all the portals like Rightmove, Zoopla, and things like that. So you're getting your exposure out there to the best people. And what we, as an agent, what I pride my staff on doing is actually finding the right person for the right property. We don't just show every single person that says they want to see your property round. We qualify them first to see if actually, A, they've got the affordability, so we're not wasting everybody's time by showing people that are completely unsuitable, that can't actually afford the property, or don't meet what you're looking for, because you may be looking for a long-term tenant and they're only looking for 6 months, for example. We make sure we try and do all of that vetting process for you at the start. We can set up all the tenancy agreement to make sure that all your legal documentation is done correctly, and making sure that then you're less chance of any problems in the future. And like I see, any fees are tax deductible. And also we can manage the property on a day-to-day basis. What you've got to think about is, are you happy to be taking phone calls from the tenants at every time of the day and night? Because sometimes they do phone up during the night. We have procedures in place so they know they get of what they can do when that happens. And actually, have you got the time to deal with that? If you haven't, then for a small amount of money, quite often you can pass it all over and know that for peace of mind, you're going to get your rental income into your bank account each month. You're going to get somebody who's dealing with it for you and just letting you know and communicating with you. So that's what you might think to do. Next thing to think about is then with the property, you are subject to various taxes on buy-to-let properties. First one, as we've already alluded to earlier, is stamp duty when you're purchasing the property, and also income tax. And you know, the more you can offset in terms of expenses, etc., then the less income tax that you will pay. But it is a rental; it is an income that has to be declared via self-assessment as well. Again, a good independent tax advisor would be able to give you good information. We actually, our last property sessions, I don't know if anybody was here from the last one, but we did run one, and we had an independent tax advisor in from Bishop Fleming. And she gave lots of good, useful information. We have, if you weren't here and you'd like to see that, we have actually got a YouTube link for that we can let people have. It is actually on YouTube, that particular presentation, so because it was videoed as well. There's lots of very useful information there. Also, as we've talked about earlier, is capital gains tax as well. And obviously that's something further down the line, but it's all things to be thinking about, and also the inheritance tax, as I've spoken about earlier. Then thinking about also, what are landlord's obligations? 10th thing really, so this is the last one in that sense, is making sure that if you have got a mortgage, or you've already got a mortgage on a property that you're thinking of letting, and it's a residential mortgage, you do need to get the mortgage consent to let. And some mortgage companies do put some restrictions on the type of tenants, the type of tenancies, etc. So they're always, and they don't always, if you've got an existing residential, they don't always guarantee that you'll be able to convert it over. So it's always best to take advice. If you actually let a property without telling the mortgage company, you are actually in breach of the contract that you have with them in terms of that mortgage. Then you need to think about the regulations that affect you that you need to set up. If it's got gas in the property, you have to have a gas safety certificate done on the property, on any gas appliance to the property, whether that's supplied by natural gas, piped in, or bottled gas as well. We can organise all of those sorts of things for you. You also need to do an electrical safety check. If you decide to put any portable appliances into the property, anything with a plug on it basically, so fridges, freezers, etc., those things all need to be safety checked. One of the things I will say to you, what it does say, some agents and some people will tell you you don't need a PAT safety certificate. What I can tell you is your insurance on the property will always insist that you should have one. And in the unlikely event that, well, you would hope in unlikely event, but if you had a property that you didn't do a PAT safety certificate on a property and you had supplied the appliances into the property, there was a problem, it caused a fire, you hadn't had that certificate, your insurance is unlikely to pay out, because it's something. It's not a legal requirement to have the test done. Actually, the regulations said when they were drawn up, they weren't drawn up very well actually, not as clear cut as the gas safety. What they said is that you need to check that it's actually safe. The only way that anybody can guarantee it's safe is by employing somebody who's qualified to actually check those appliances. So those are a good thing to do. The other thing you need to be thinking about is need to have a NIC, EIC periodic check done on the electrics every 10 years. If you walk into a property you're looking to buy and it's quite an old property, it's well worth looking. The most common thing to look for first of all is what type of consumer box has it got? Has it actually got trip switches? Chances are then it's been maybe updated. If it looks a really, really old one, then you're going to need to be thinking about rewiring your property, and that may be a cost factor you need to think in if you were purchasing a property. You might be able to negotiate on price. So that's something to think about. If you're going to furnish a property and you're aiming for a particular sector of the market, like company lets or students, then you need to think about the furniture. You can't just put in any furniture. It has to be furniture that's compliant, and we can give you advice on that as well. You also need to think about fire safety precautions. It's never been up until now, other than brand new builds, a requirement to put smoke detectors or carbon monoxide detectors in a property. However, that's changing. I think it's as of October this year. So that's something, seems quite a common sense thing, I think, and for how much they cost, it's quite a reasonable thing. But what you do need to do is make sure that that's put in an inventory, that the tenants will also check and change the batteries if it's not a mains wired one. If you buy a brand new property, they're usually mains wired in now. I think it's a requirement of new builds, but and in flats quite often you'll have them on newer build flats, but that's something to think about. Also, like I say, you need to, if you're going to rent your property out, you do need to have an energy performance certificate. It's a legal requirement for a tenant to be able to see that prior to even viewing and know what it is, so they know what the potential cost might be for running that property. And also, if, like I say, if you've got a house that may be a house in multiple occupation, you need to think about what the licensing requirements of that. Is it a discretionary license, or is it actually needs a license on the property? There's also, in Bath, for example, there's areas where there's Article 4 in enforcement. There's quite a lot of Bath, actually. So that's something you need to be aware of as well. And also, you need to be thinking about the deposit that you take from a tenant has to be protected in one of the tenant deposit schemes. There's various schemes. There's custodial schemes where you actually pay all the money over to them. You don't even hold the money. Sorry, the custodials, you keep it, sorry. Insured back scheme is where actually they have it. No, the other way around, sorry, that was me. So in terms of the scheme is having to think about, if you use the agent to keep it for you, the agents can actually do that and make sure that they have a scheme in place. It is a legal requirement that every deposit you take from a tenant has to be lodged in a scheme, and you have to give them the certificate and you have to give them the information leaflet, and there are timescales by which you have to do this. Again, an agent will be able to tell you this. One of the things also there's a pilot scheme, and that this is going to be rolled out nationally, are immigration checks. Unfortunately, landlords are going to have to be border control, in that they're expecting us to now check, landlords and agents, the onus is on both, to check the immigration status of anybody renting the property. So you need to get copies of passports, any visas. So if you've established that they're not got the ability to work in the UK, that they've got visas that give them the right to stay. So and that covers the period of your tenancy agreement as well. And that's a thing, especially to think about with students, because a lot of students come from overseas. A lot of people returning from overseas. There's a lot of migration, obviously, but you need to make sure. And there is a pilot scheme running in the West Midlands at the moment. There's a survey that they've asked agents and landlords to complete as part of the pilot. There was a report due out just from April onwards. We haven't got a set date for it yet, but they haven't actually said whether they'll still go ahead. Well, they've said they'll go ahead with the rollout, but they haven't said whether it's when they get the report or after the report. So that is going to happen. It is definitely going to happen. We already get we always ask for ID on all of our tenants, but we're looking into all the visa things, because obviously there's a lot of countries where you don't have to have visas, but it's actually establishing what type of visas that need to be in place. But that falls on you as a landlord to check that. If you decide to let it privately, an agent will do the checking for you, or a good agent should do. So what next? Hopefully those 10 steps have been useful for you. But if you decided that you are now looking to purchase a property, you can register with our Andrews Investor Club if you haven't already done so. You can speak to our independent mortgage advisors about gearing if you've got money to invest. And if you're looking to purchase more properties, obviously we can help you about any of the properties that we've put into your packs tonight, or anything else that may come up into the markets soon. In terms of what the Andrews Investor Club is, basically what we've done, we've set this up as, and we can offer portfolio assessment. So if you've already got a portfolio of properties and you're not sure whether it's maximising its potential, we can give you advice on how to do that. If you're looking to expand it, we can give you advice on how to expand that. We can facilitate the purchase of future investment, so we can actually find properties for you, so if you decide to do that. If you've also maybe got a property that you decide that you actually want to market for sale, well, rather than give your tenant notice and then market the property, because quite often that might what's happened, and then you're having to pay any mortgage on it or keep the costs going worrying about an empty property, you could decide that you could market the property with the tenant in it. Because what we're looking to do, we've got lots of people who have registered with our investor club who are looking for other properties, and they would love to buy a property that's already got a tenant in the property, because that way both of you are cutting down on any or increasing your potential of your yield on the property and cutting down on any void periods. We can give you a designated independent mortgage advisor, and we'll give you monthly market updates on what's actually happening with top properties to invest and the best mortgage deals that are available as well. I've been talking all this evening. Has anybody got any questions that they'd like to ask? Yes. Article 4 is basically councils were given designated powers to make extra provisions on areas where they can restrict the amount of rented accommodation that becomes available. And it was done really to control areas becoming completely rented. So it's turning complete area or ward of parliamentary ward, for example, into all rented, and trying to restrict the amount. So actually restricting what was there and trying to keep some owner occupied or a certain mix of tenants into the property as well. It was given to councils to be able to, the main thrust of it was actually given to councils to try and force up those areas where perhaps they're not in very good condition. For example, a lot of landlords not doing investment and poor run down areas, to try and force landlords to actually, and control that. However, and in Bristol, for example, they've done that and used that very for the right reasons really, and they've done it around the sort of Stapleton Road, eastern area, certain parts of off of Stapleton Road, where there was very, very poor levels of rented accommodation in terms of the standards. So what they were trying to do was also then stop new people coming in and actually having the whole area completely rented and nobody taking ownership of things and that as well. Unfortunately in Bath, they did it in lots of areas. So there's an awful lot of areas in Bath of Article 4. So if you come to purchase a property, if you're renting it to a family, for example, you won't need Article 4. The moment you rent it to a group of sharers in an area that's designated an Article 4 area, you will have to apply for that. And what you need to do is try and apply for that before you purchase. The problem is it takes quite a while to apply. They had a backlog when they first set it up for about 5 months. I think it's down to about 2 months now, but there's no guarantee, so that's something to be thinking about. So it has restricted some investment in some areas, because if you're looking to invest a property that suits sharers, then you would have to apply for the Article 4. Okay. Lady at the back. Not at the moment, no. And I act as an advisor on behalf of landlords and agents on the west of England, which is sort of Bath, Bristol, North Somerset. All try to work with agents and landlords, and they do ask me as to what the impacts and things, and I try and sort of, and they're trying to work with landlords because the big cities like Bristol has a big problem with housing and they need to work with the private rented sector, but I can't guarantee it won't change. But they do seem to be, of some of the councils, a little bit more receptive, shall we say. I don't know if anybody saw or heard last night that they're talking about accreditation. And they did pass something in Bristol City Council last night about accrediting landlords, but it's not something they can force you to do. It's more of a voluntary thing, but that's the sort of ways they're trying to work with people and trying to get the standards up better rather than actually force people, really. The gentleman there. It depends on the size of the property. A house of multiple occupation is normally 3 stories or more and 5 or more tenants. But it does, councils' interpretations of it do differ with different councils. And Bath will vary a little bit different from Bristol. So you do need to take individual advice on things as well. But it depends on, it's more to do with the amount of people in the property generally, but they also can apply to flats in a house as well. If you've got more than a certain percentage of flats in a converted house, for example, that can make the building an HMO. So it's,
3-bed semis aren't likely to be covered
no,
in that.
a 3-bed semi would be okay unless you started tripping into 5 tenants who are not living together as one family. So they can't all say that they're all related and they're all cousins of each other. They'll never get away with that one either. So, so any other questions? No? If anybody's got any questions they don't feel comfortable to, sort of ask in an open forum, we're quite happy with everybody's sort of staying around a little bit afterwards, so if you've got specific questions you'd either like to ask me or our mortgage advisor, Michael, or any of the staff in terms of properties that are available for rent. We've got some estate agents here as well that can also tell you about properties that are for sale. Quite willing to do that. Otherwise, I'd like to thank you very much for coming along this evening and hope you found it useful. Thank you.